We're talking about Zomato now. Karan Taurani, Senior VP at Elara Capital, is joining us for more on that. Karan, good morning. I was going through your note where you see an upside of 44% on Zomato. And, you know, I'm wondering whether what you heard in the conference call yesterday has sort of made you a bit bullish, because the first reaction that the market had to the Zomato numbers was quite negative.
Hi, Tamanna. Good morning. So I think the first reaction, was more in terms of the profitability. The consensus estimate on EBITDA was about 3.4%. Our expectation was 2% for the consolidated company. It came in at about 2.2%. So I think that was the reaction. The second negative reaction was also on the ESOP charges. They created a pool of ESOP for 2% of equity, which will be distributed over a period of 2 years. Now, the point you have to look at is, I think the Blinkit commentary is very aggressive. Digital businesses are about, takes it all. And if you look at Blinkit, they already have a commanding position. Somewhere they are a market leader. And I think as per our assessment, their market share in quick commerce is somewhere close to about 35 to 40%. Now, if they go for such kind of expansion plan over the next 1 year, and if they're able to, penetrate deeper into markets where they're not present, where the competitor has got a bigger presence, I think they can potentially move up to 50% market share. And the kind of clout that they will have because of this dominance over the medium to long term is massive. Because I think, they can garner a big chunk of ad revenue, which will better profitability. They can command more premium take rates, as compared to peers. So the point I'm trying to make is it's a very good strategy. And I think they are the only ones who can afford to do this, because other peers are making losses in the quick commerce segment. Blinkit is the only one, which is on the break-even path right now. So let's say that even if they're not able to, make profits, but if they remain at similar levels as far as break-even point is concerned, and if they expand this aggressively without increasing or without kind of incurring, hefty losses, then I think it's a potential win-win for the medium to long term.
I just want to understand, Karan, in terms of valuations, where is the upside, and then put this into context of what happens when a Swiggy also lists later this year. We're talking about a moat. This is the only listed player in this space. Do you still see that much of an upside, considering valuations and its prime competitor also getting listed?
Yeah, I think in terms of valuations, the food business stand to be at a premium. I think, given the ESOP charges, that they have, kind of spoken about, that, the ESOP charges will continue for the next 5 years. We have cut our EBITDA estimates for the food business, and the valuations for the food business, that way stand to be lower by about 10% in terms of what we were estimating. So from a food business standpoint, the valuations are at a premium, and there's not much to play over there. But the bigger delta here is Blinkit, right? So given the kind of guidance that they have given, if they are even, trying to break even over the next 4 quarters and remaining at similar levels as far as EBITDA is concerned, and maybe in FY26, FY27, we've assumed like a very small margin of 1% EBITDA as a percentage of GOV. And if they're able to get these kind of numbers, I think Blinkit valuations move up sharply. So, from a company standpoint, Blinkit valuations today is at about 42% in terms of total valuations as per our assessment. And, before this announcement came, we were valuing Blinkit at about 25-27% of the total company valuation. So I think Blinkit is a bigger delta to play. Blinkit is a bigger monitorable here. And of course, as I told you, they stand to be far superior in execution versus any other competitor, be it Instamart, be it Zepto, be it Big Basket. So I think food business, yes, there's not much to play over there. But if Blinkit execution continues to surprise, or rather, gives you an inline performance rather. So I think you will continue to see upside on a stock price.
Okay, so yeah, Blinkit's revenues have grown 90% plus year on year. So the story is all about Blinkit. Just one last question, Karan. Do you expect a turnaround on the stock today after, some of those details have sunk in post markets close?
See, it's very tough to say. Basically, there's only a mixed feedback amongst investors, because of lower profitability. So basically, investors were also expecting Blinkit to drive profitability going ahead, which may not happen in the near term. That's one. Secondly, ESOP charges has led to lower EBITDA margins for the company as a whole. That's the second thing. So because of these things, there could be certain investors who were kind of focusing more on profitability than growth. So potentially, I mean, it's very tough to call out, but yes, the stock may open weak on a timely basis, this feedback. But I think that there will be a very strong pullback post that, because from a medium to long term perspective, there will be investors who will be chasing growth, and somewhere there is visibility, there is confidence that given the kind of track record and execution that we've seen on Blinkit, from Zomato's side, you will see EBITDA margins also coming once they attain market leadership. So I think it's going to be a very strong buy on dips if at all it opens down. But if the investors are happy with the growth, it might even open up.